I can't be responsible for somebody else. I can't promise things that I'm not in control of. And so that was a really important lesson I learned.
Hey guys, on this episode, you're going to be hearing from Rich Weidel. He's the CEO of Princeton Mortgage. I think they're out of New Jersey. And you guys, there's something about him. After I got done interviewing, I was like, man, he is one intellectual dude. He's a smart guy and he's very well read. So it's interesting because the way he thinks, he doesn't just off the cuff go do stuff. He analyzes it, right? And a lot of this is CEO stuff, but the reality is we're going to relate a lot of this back to what an originator should do. Originators are off the cuff a little too much. They need to analyze their day. They need to analyze all of their chores and tasks and things that they do throughout the day, and then come up with a better solution. One that you'll hear from Rich, that's super important, how to lower the cost of everything you do. Because ultimately, and this stat caught me by surprise, but he said some of their best originators, they have 125 basis points into operations. It's like, we love our operations. They do so much for us. They do this, but yet 125 basis points, they don't even know how much they were actually paying. So what's profitability? Yes. How much are you bringing in? How much volume are you closing? How much in commissions? But then ultimately what matters? How much you're keeping, right? So we're going to go through, you're going to hear from a guy and how he runs his company, which I admired quite a bit and I learned a lot from. So I hope you guys are going to learn a lot and a way to figure out how to do this into your personal business, right? Your origination business. Remember, you're the CEO of your business. Hope you guys like the show. Rich Weidel, Princeton Mortgage. Thanks for joining. How are you?
Dino, my pleasure. I'm glad to be here.
So, dude, I got to tell you, for all the mortgage advisors listening out there, I like to always brag that I don't cold call anymore. I don't have to go do all that stuff anymore. But the fact of the matter is, that's how I met you. I reached out to you on LinkedIn cold because I appreciated your kind of posting and the stuff you were doing and where you were at in this industry. And I was like, I got to meet this guy. So I cold called you in a sense, right? Through LinkedIn. So first lesson to everybody is it works. Reach out to people. It works. So anyways, man, I'm glad you're here and we finally connected.
The flip of that, I'm sure we'll dig into it today, is put yourself out there so that people want to reach out to you.
Great point, because I also believe that not everybody will want to, and that's fine. I'm a huge believer in your tribe, like your people, the ones that appreciate you, for who you are, will reach out to you and will want to do business with you. So anyways, man, Welcome to the show. First question, who is Rich Weidel, both personally and professionally?
Let's see, 60 seconds. Very fortunate. Met my wife, Sarah, my freshman year of college. Actually, I had a mentor that I had asked to write my college recommendation letter and said, I'll only write it if you read the book, Think and Grow Rich. Are you familiar with that one?
Very much so.
So I was like 17 or 18 and I said, cool. Before I write your letter, I need your goal list. He's like, I read this book. Every wildly successful guy is like, read this. And I put together a goal list for him. He said, if you send me your goal list, I'll write your recommendation letter. And sorry, that's my wife calling me. One of my goals was to go to college, and I was I chased a girl through high school, didn't work out. I was angry about it. I'm like, I'm going to start dating the girl that I married. And in October of my freshman year, I started dating the girl that I married. So I was like, oh, wow, there's some power in goal setting and neuro-linguistic programming, all those types of things. Now we can dig into it. We've been together for over 20 years now, and I still feel like I'm getting to know her, and I'm still figuring marriage out. I'm still figuring relationships out. We've got 4 kids. Oldest is 10, youngest is 3. Professionally, I kind of graduated in 2009. There was no jobs. I hid in grad school for a couple of years and just said, I don't know what I want to do in life. No idea. And so one of my, and I'm sure we'll dig into this, is do the thing that scares you and do the hard thing. And so I kind of was like, what's the hardest job to get? And in my world on the East Coast, the hardest job at the time was an investment banker at Goldman Sachs. So got the job at Goldman Sachs as an investment banker. Had no idea what it was. My dad was a real estate broker. First week, I got hit with a tomato for Occupy Wall Street. If you remember that was all going on?
Yeah.
I remember looking at the protesters. It was like, I may agree with you. I don't know. I'm just glad I got a job. Yeah. And pretty quickly learned that the people that I was lending money to, the entrepreneurs, the people who built businesses, were way more interesting to me than the people I was kind of working with. And there's nothing against them, just personality type. I think with 4 kids, my hope is that they find the thing in life that is work, but that you fundamentally enjoy. And I remember one night sitting there at Goldman, it's like 2 a.m. I'm doing another spreadsheet for another pitch. And I looked over to the woman next to me, and I'm so glad that I learned this lesson early. And I was like, what are we doing with our lives? So I took her headphones off. She looked over and she's like, what do you mean? I'm like, this is so stupid. Like, what are we doing? She's like, I love this. And I was like, oh, I'm going to get my ass kicked because like there's people here that love this and I hate it. And that's when I realized I needed to leave. Left, went to work for another really successful entrepreneur and thought that I could shortcut, meaning that I could ride his coattails and that I could get entrepreneurial returns and experience without taking entrepreneurial risks. Learned the hard way that you can't have your cake and eat it too. I have a lot of compassion now that I've been running a company for 10 years, but looking back at the time, I felt very much like he screwed me in terms of he sort of recruited me to these dreams that I don't think he ever intended to fill, but I was like young and naive. And when the day came after 2 years for the big bonus, it didn't materialize. I think another great lesson in life was that I got the fortune to earn early, which was dreams are cheap and don't look for anybody else to save you. And in a leadership role now, I'm very careful, and it costs me in the short run all the time to not take more than my 100% of responsibility. I can't be responsible for somebody else. I can't promise things that I'm not in control of. And so that was a really important lesson I learned then. And then I've been here at Princeton Mortgage since early 17. It was a small mom and pop, needed a full rebuild. We ripped 18, 19, 20, 21 in the wholesale channel. We became a top 20 wholesaler, thought that we'd like achieve the dream, all this awards, 85,000 from 0 revenue to 50 million. Market churn, rebuilt, and now you're catching me on the other side of the journey of 3 years of really scaling down, rethinking what differentiates in this business of residential lending, and the excitement of what's going on with the AI now and technology and things that are possible. And we've got real momentum again. So now I'm here with you.
Are you guys still doing wholesale, or are you guys strictly retail?
No, completely exited that channel in 22.
Okay. And how many originators does Princeton Mortgage have?
About 16. We're tracking at like 700 million and adding about the last 3 quarters in a row. We've added about 150 million a quarter.
Nice. Awesome.
Yeah. So we're starting to kind of grow. And that's probably the peak capacity for the foreseeable future. And we can get into like growth and the cost of growth and getting over your skis and diluting talent density and how if you don't simplify the complex and all those types of things. So I think, I'll call it sort of phase 1 of Princeton was revenue growth, just revenue growth. And we achieved it. I've learned a lot about the relationship between revenue growth and expense growth and discipline growth and how do you do those things.
Yeah. I always, when it is busy, right, when the rates are low and everybody's making money, I always tell everybody after enough years of learning, it's fool's gold. Like,
yeah,
you're not a genius all of a sudden because you're making money, and you're not a genius because all your investments are working when crypto is on its way up, right? Like, you're a genius when you figured out how to keep it all, and you're a genius when you figured out how to like make it all work together for the better good of everything, right? So it's interesting because we all had some pretty good years during that COVID when rates were low, and then everything flipped on us. And, a lot of our listeners are all still struggling or are struggling. A lot of them are not.
You were trapped to struggling?
Well,
I thought this was a podcast for winners. I knew it was a podcast for the struggling.
It is. The thing is like you need to move beyond that, right? Like I always, back in 2008 when I struggled, like I lost everything during that period of time, right? I'm not a down person, but I was down for a minute, right? Just for a minute though. And I remember looking around, I was like, man, those guys are crushing it. I'd never done an FHA loan in my life because I was housed out of Newport Beach, and all I did was bigger type stuff. I never even knew how to do an FHA loan, but then all of a sudden I was like, I better learn how to do FHA loans because those guys are crushing it on FHA loans. And all I learned was that it doesn't matter what the industry is doing. It doesn't matter what the economy is doing. It doesn't matter. Somebody's always crushing it. And that's like one of the things that I think I was drawn to you for. I feel, and take numbers out of it for a minute, I feel like you're crushing it. You're hold on,
if you were to say, where would I say that we're crushing it, would be that I think in this industry, the only differentiator is cost structure. And we've built the company in a way that our revenue growth is faster than our expense growth, and adding more revenue is extremely accretive. So as we're growing, the marginal cost is getting lower, which means as we add more loans and more loan originators, it benefits the entire team because our fixed cost base is growing at a much slower pace than our revenue growth. And I think that's now, like we talk about, like, and for loan originators, and I've got lots of thoughts on how it's going to affect them. It's the technology now allows us to have costs decrease without service degradation. And so I think the entire game is changing. I think there's going to be a convergence in 3 to 5 years, maybe it's 5 to 7, whatever it might be, where everybody looks the same. But the path for the next 5 years, I think, is very different for both originators and companies in terms of wildly different operating methodologies. And the bottleneck is courage, right? Like, can people actually subtract? And so I think that's what makes this a fun time.
So let's dive into that then, right? Because when I said crushing it, it's like you're doing stuff that rather than being paralyzed, you're doing something, right? I try to be a humble guy, but I'm going to say I'm crushing it. It's not that I'm crushing it numbers wise. I'm crushing it because I'm taking chances. I'm doing things. I'm making changes all the time, right? Because our industry right now requires that. And same with originators, right? I mean, you can just sit there and keep doing everything the same way, or you can start making some changes. And I look around and there are originators out there that are absolutely doing unbelievable business, right? In what everybody, a lot of other people would call a terrible market. And it's like, no, how come he's doing 200 or 300 million in sales or anything over 100 million? Like, come on.
Yep.
You might need to be the one to change, right? So both of us, and you're younger than me, but a lot of times it's like the older IMB guy that's had tremendous success doesn't want to change, doesn't want to do anything.
No, I don't think I'll want to. Yeah, exactly. I hope I'm not having to work as hard as intellectually as hard as I'm having to work right now when I'm 20 years from now.
Yeah, but that's why we're doing it now, right? So I wanted to dig into what you're doing and also your mindset behind it, because I think, it's really a big part of it. So let's just dig into like what it is that Princeton, right, and you behind Princeton are doing as a company, but also, let's face it, what you're doing to create a higher probability for an originator to be successful at Princeton.
Yeah. And thank you. So you said something earlier that really resonated with me, and it was about understanding the market cycles. Stan Middleman, the founder of Freedom Mortgage, I don't know if you ever talked to him. He's been a mentor of mine. I reached out on LinkedIn back in like 2018, and he responded, and I went down and met with him, and he's still really been always very gracious to me. And and the people that I know, I think he's the best operator in the business. I mean, there's lots of great operators. And I remember I was trying to figure this business out, right? And I was like, I'm going to do this and I'm going to do that. And I was like, well, how would you describe your job? So I was actually trying to learn, what's the CEO's job? I had to ask a lot of people that question. And he said something that I'd never understood, or I'd never heard. And he said, my job is to price and manage risk. I was like, oh, that's interesting. Because other people I'd asked about it were like culture and sales and that kind of, and he was like, just price and manage risk. And then he's like, so what are you doing? I started to explain my plan. He's like, well, your plan doesn't take into effect of market cycles. And I was like, well, I'm just going to grow through market cycles. No, I'm not strong in the market cycles. And he was like, I think your job is to navigate market cycles. And I didn't understand that at the time. And then later on, I'm like, oh, Stan's been doing this for 40 years. He understands what it looks like. And so I'll fast forward to like, what are we doing now? And I'm gonna kind of gear it towards originators. I think that for most of us, and you mentioned a word that you're winning because you're not stuck right now, or you're thriving, I think was the word you said. I spent all of 22 being stuck, just stuck. And we find our brains find reasons to blame things other than ourselves, right? So you can blame the market. Then we find things that tell us we don't need to do anything about it. And so, there's a lot of talking heads in the mortgage industry that just wait it out for a year. Just wait 22 out and it'll be okay. This has happened before. Hang out for a year. So like, I just spent 5 years building this huge infrastructure, 220 employees, all this stuff. And it's like, do I unwind everything? I was holding on, losing money. And Q1 of 23 was pretty good. I don't know if you remember, like rates came down, volume kind of surged it. Okay, wow, it was great. We just had to make it to a year. Now we're going to rip again. And then Q2 of 22 was rough. It like craters. Oh, crap. And I actually had a phone call with Stan and I was feeling really bad for myself and I didn't know what to do and I'm stuck and I'm frustrations everywhere. I'm like, Stan, how you doing? He goes, I'm great. He's like, we're going to cut my costs dramatically through layoffs and it's going to be one of my most profitable years ever. And I was like, oh no, I'm getting my ass kicked. And here he is having, and the reason was he saw reality better than I did. He understood the game that we were playing. I don't mean to be uncompassionate about laying people off in the trauma of that, but he understood the game where I was living in a fictitious world. And so I kind of made a decision at that point, and you would remember this, is the industry was running at about $12,500 of cost per loan, and the revenue per loan was about $10,500. Everybody was losing $2,000. And I sort of made a decision to say, instead of fighting about concessions and holding margin and selling higher rates, what if we took the rate as given, meaning the market sets the rate? We're in a highly commoditized industry. The only thing that we can control is our costs. So what would it look like if we figure out how to get profitable on a $10,500 cost structure instead of a $12,500 cost structure? And then we got very serious about that. It became our guiding principle. And I learned things that I think this is one of the things that we really help branch managers with. The biggest driver of cost is productivity. So the biggest driver of rates is cost, and the biggest driver of cost is productivity. And the biggest driver of productivity is the quality of your workflows and what do you subtract out of your workflow. And so I run across, it's like the big hidden tax of the mortgage industry is we do a lot of branches that are joining us lately, pretty big production units. And they're always very, very proud of their support team. They're like, look at what we have and how great it is. I look at it and I go, dude, it's really easy to build a big support team that makes the originator's life easy at a cost of $4,000 alone. And so like I run into these non-commission expenses within the branches of like 100 to 125 basis points. And I'm like, that's not impressive. What's impressive is doing an amazing service level to the borrower and to the originators for 50 to 60 basis points of expense. Then you have a really good process. So we just started thinking about everything differently.
So real quick, I'm going to stop you for 1 second because that's
I'm like a wind-up doll. Interrupt.
No. I rarely, I should say, ever meet loan officers or branch managers, right, that understand by basis points how much they're paying support staff. They don't see it. And when you put 125 basis points, my gosh, that is a ton.
Well, let's just think about it this way. The average branch margin in the industry, right? So in a P&L environment, is probably like 200 to 225 basis points. The loan officer is getting paid 100. That means there's 100 to 125 basis points of sales expense sitting in that branch. And so when originators want better pricing and they expect the company to be able to handle it, I think the average company all-in expense is like 100 to 150 basis points, and the sales expense is like 200 to 225. So like for rough math, sales is 2/3 of the entire cost structure. And so I think companies, have been misleading, mostly saying like a company can only do so much. If the company and the loan originator partner on the overall cost structure, you can really pick up 75 to 100 basis points, but companies on their own can't do it if they're not playing around with sales.
Yeah. And let me ask you this question. I've been struggling a little bit lately because I feel like mortgage advisors, I call them mortgage advisors real quick, only because I feel loan officers have jobs, mortgage advisors have careers. So I feel like they're all getting really lazy and want somebody to do everything for them. And what I'm finding is the quality of the loan is starting to drop a little bit because the advisor, and maybe it's the loan officer, not the advisor, right? But is not doing their job up front as much because they're depending on everybody. Only they still want that maximum, basis points for themselves and don't realize what all this cost is. And there's a piece of me, and again, I'm a little bit older, right? And I've been doing this for 28 years. And when I started doing loans,
You know how to put a loan file together.
I knew how to put a loan file together. And there is a piece of me that says, you know what, don't even bother training these guys how to do that. Just get them out selling. But they rarely ever take that time that they're saving to go out and get more business. Like I don't see them getting twice as much business because of it. And what's happening is they're falling apart on the back end, don't even know what the job is anymore. So they're not even as good on the front end. So I don't know. Just a quick question for you. Like, how much do you guys take off of loan officers? And I'm at fault. We do it. We do it all too often. I even just told my director of ops, I'm like, don't give him the answer. Guide him to go find the answer, because all he does now is just constantly call her trying to find out answers. It's like, man, come on, do your job.
So I read a ton and I'm very thankful for it. And it helped me immensely in my career to be able to have mental models where I lacked experience. I could rely on books to introduce paradigms and thought processes and give me things. Now there's no shortcut for experience, but it's helpful. And I used to get frustrated with some of my team because I'd see them struggling with something, be like, if you read this book, the answer's in here, like read this book. And they wouldn't do it. And I remember kind of complaining to a friend once. I'm like, I don't get it. Like the answer's right here. And I'm like feeding it to them and they won't take the 3 hours to read it. And he was like, Rich, thank God they won't. What do you mean? He's like, that's because it's our superpower. If everybody read all the books, we wouldn't have any advantage. I was like, oh. So like, I kind of don't really care about what you're talking. I think that becomes I've lived that world before with originators at Princeton. We don't tolerate that. We don't have that situation. And so now at the same time, I think what is happening is that technology is reducing, and I mean, I'm seeing it myself, right? Like absolutely what we're doing now with our automations is reducing the loan originators' need to be a subject matter expert and putting the file together and doing those things. And so that's solving itself. I want the originators out there selling and building relationships. And so I actually think it's going to be really difficult for guys that built their career on being the subject matter expert, because that's getting devalued, where demand generation is now getting more and more valuable. And what I mean by that, you mentioned earlier, the $100 million producers, the $150 million producers. The thing that's held them back from being $200 and $300 and $400 million producers is the ability to do the business, right? It's hard because like you get more loans, your processor quits, your LOA moves cities, and you have this constant like scaling problem. And as that scaling gets easier, they're going to be able to do more loans with less work. And so I think the people that don't want to do the selling and get out there and build the relationships are just going to get wiped out. Like I think it's going to be much harder to do. Like you can make, what if you do 2 loans a month and your average commission rate's $4,000 a loan on a $400, you're making $8,000, you're making $100,000 a year on 2 loans a month. How many hours are you really working if you're doing 2 loans a month? Tell me, right? It's a great job and you're making $100,000. I think that's going to get really difficult to sustain. So I think we're going to see, I actually think that everybody's talking about the consolidation in the mortgage industry. I think there's a cleansing that's happening right now. It's a forest fire because there's all the, like you said, all these like companies with owners at the end of their career that made a lot of money in 2020. They've been losing money for years. They don't have a succession plan. So they got to do something. Those are clearing out. And I think you're going to see a bunch of companies kind of like Princeton, like your company, that are figuring out how to operate in this environment that are going to continue to grow and get market share. So I think the other big thing is just wild. There is currently no cost efficiencies at scale in the mortgage business. And this is verified by the MBA. It's verified by Richie May that that's the biggest opportunity for smaller companies now. If we can maintain our cost structures and scale them with a different and actually gain efficiencies of scale, we can move much faster than the very big boys right now.
I think that's where our big advantage is right now, because we
Yeah.
can do that. Even when I make mistakes, the mistake didn't cost me millions of dollars, right? It cost me a small amount to figure it out. But if it works, man, being nimble and quick when you're this size, I think really overcomes the other guys, especially when they're too scared to make big decisions and do anything right now.
Well, it's just I mean, I know how hard it is for me as what we're getting bigger now, but as a small company, it was excruciating to transform it. I remember like in 18, 19, 20, 21, 22, 23, bringing originators on from big shops was kind of a little bit like, because they'd get in and be like, wait, you don't have this, or you don't have that, or my old company had this. And you had to go through like the 90 days of like, no, we don't have that. We don't have this. We don't have that. That doesn't happen anymore. We bring big producers on from big companies and they're like, whoa, this is better. And it's because the speed with which we can move and the cost of technology coming down so dramatically with AI now that like, I don't know, like it's a different world.
Yeah. I want to have a little bit of fun just for a minute.
Yeah.
You're an IMB, and
Yeah.
I'm I'll call myself a broker, right? We're hybrid.
Yep.
We're non-delegated. If you had to poke a hole, right? Somebody's listening and is trying to decide if they're going to go IMB route or broker route, and you wanted to talk somebody out of coming to my shop to come to yours, what would you say about why they shouldn't go broker?
So
And you can't hurt my feelings.
no, I'm not. I think it's a dumb argument. It's actually like kind of where, and like I lived through brawl and brokers are better. And I had wholesale and I had retail and I've seen it all. There's trade-offs and cons to both. And I think that it's more personality type driven. Right. And so
Good
I think
answer.
the natural order of things is companies tend to go broker, non-del, delegated because you are able to get more control and potentially give a better experience to your loan originators if you're in control of those things. At the same time, once you're in control of those things, complexity increases. And as complexity increases, it might be slower for me to roll out a full delegated product rather than you going on rolling out a non-delegated product. What I think that the brokers kind of miss is there was a period of time when called 22, 23, the brokers really had an advantage because of the bloated structure in retail. And the bloated structure really exists a lot. Retail has had to kind of match what a wholesale and a broker did. So you don't see as much migration from retail to wholesale. There was a period in 22 and 23 where I had to hear from my guys all the time, this broker is crushing and like, why can't we compete? I don't hear that anymore. And so essentially, wholesale margins, and we can beta, or you want to Provident and this and that. But generally speaking, we look at PennyMac, UWM, and Quicken or Rocket now. Their total gain on sale in wholesale is about 130 basis points last year. That's more than my retail corporate margin. And so in a lot of situations, depending on what the broker comp is, I can be more competitive in that piece of it. So I kind of like, hey, choose your poison. And it's a personality type thing. I do think for somebody doing 10 or more loans a month, a really well-tuned lean retail environment's probably easier to do those 10 or more loans a month. But I could be completely wrong about that. We see most of the top producers doing real volume kind of in IMBs. And if a guy's doing 2 or 3 loans, they might be better off in a broker type environment.
Yeah, you're first of all, I got to hand it to you. You're very.
Is that a fair answer, or like where do you disagree with me?
No, I was going to say you're really polished in your answers. You could be a politician, even the way you kind of.
I don't know. Actually, just like I think it's a dumb argument. Like I think the whole thing's so stupid. So like fundamentally, economically, the parity between broker and retail, there's going to be periods of time of dislocation between those two things. But then they're going to converge, right? Capitalism always converges to like, hey, it's kind of the same rate and the same comp. And I think that's what we see. And so the market's more or less stabilized at around 25 to 30% broker and the rest IMB. And okay, cool.
Yeah. So my personal viewpoint is first and foremost, a good mortgage advisor can be successful in any path he decides to go in. Period. Right? Like, it's not the company, it's the mortgage advisor. When I was at an IMB, when I didn't like what they gave me, I created my own, and I became more successful at it because I managed it, I controlled it. Now, if a good mortgage advisor can align himself with an IMB that's giving them that support and is aligned in their service levels, right? The expectations of service levels, then man, that's powerful, right? The whole broker retail thing, right? IMB. At the end of the day, today we have maybe this exodus, or we had a big exodus coming out of retail, and in a few more years we might have the opposite happening. It's been that way for a long time, right? So I don't really think it matters anymore. And if you want my own personal opinion,
Yeah.
I love being a broker because I am running a sales organization, which I have fun. So earlier at the very beginning, you said when you were at Goldman, it was like, what am I doing here? Like, what are we doing here? Well, I love what I'm doing. And it's easy for that. If I had to get into operational piece of it, I might not love it as much. Now, granted, I would figure it out and I would hire somebody to do that. But I love being on the sales side of things because it's more fun for me. But secretly, this is the piece I've never said out loud, but secretly, I think I would rather be an IMB one day. But I can be more nimble, and speed right now I think is important to do all this stuff. Down the road, maybe one day I do switch. But I love the idea of no matter how busy it gets, I can count on Rocket, I can count on UWM or whoever, a Penny Mac, right? And kind of divvy them out a little bit so that I can get all my deals done in 24 to 48 hours, as opposed to all of a sudden rates drop to 3 or 4% and we're so slammed that we can't even get deals done in 60 days,
Yeah.
So that's just,
I think, I don't mean to keep quoting Stan Middleman, but like, I do go back to things he's told, is that like channel doesn't matter, type doesn't matter. It matters, the type of business that you operate, right? And so there's really good broker shops, there's really good IMBs, there's really good wholesalers, there's bad wholesalers. I think ultimately what it comes down to is the different personality types. And do you have some level of differentiated advantage that is valuable, some segment of originators, and then it's matchmaking, right? So like, you're not going to be the best shop for everybody. And I think that's where you get frustrated in this industry, is you're always like, what's the best? And like, it's like asking which of my 4 kids is my favorite. Well, I love them in each of their own unique ways, right? Like, they're different. And so that's okay.
Yeah.
And then within each channel, there are really good companies, tons of average companies, and really bad companies. And I think that for the originators, and it's what I do with my newsletter, when I do things like this, I'm very rarely making a pitch for Princeton. I'm actually really just motivated to educate originators to try to make so that they're better informed to make the best decision for themselves. So I'll give you an example. We hired a woman from a broker shop about a year ago. She called me this morning. She's rebuilding her career. She's, I think, 12 million in the last year. She said, hey, listen, I really want to be doing more business. I'm struggling. She moved to a new market when she joined us. So she's kind of rebuilding in a new market. Because I think I'm going to switch. I'm going to, it's a big box shop. I'm like, oh, cool. You got my support. Appreciate you being here. The door's always open. Why are you leaving? What's attractive for you? And she's like, they've got a bigger brand presence in our market. And I think it's really going to be helpful to have a local office that's going to help me get a foot in the door with the realtors. Now, that doesn't resonate with me as something. I haven't seen that work for an originator. I don't think she's right, but that's what she values. In her same market, I have a $110 million originator that refuses to market the Princeton Mortgage name. And if I ever was like, you need to do this, he'd quit. And so like, very different perspectives on it. Okay, I'm more aligned with him that the company matters from a marketing perspective very little. It's about the personal brand of and the relationship building of that originator. But you're seeing a difference in personality types. And so I can't be everything for everybody. Go forth and conquer.
Yeah, agreed with you. And I've learned, I would even say the hard way, that if the person's not right for me or the company, It's just
Yeah.
best that we never go there,
Yeah.
for everybody's sake. And that's
And look, it's
okay
not
because
that she
there's
was
plenty of
here.
other people.
She was profitable for us. She's got good relationships, living on good terms. Like, okay,
Yeah. Yep.
Yeah.
Okay. So, you, in all your years of wisdom, have decided that you are going to make this industry better by creating technology. And I want to learn a little bit more about what you've created and how it's going so far.
I wouldn't say it was because I wanted to make the industry better. It's because I want to. I am personally bothered by inefficiency and broken processes. So it's probably it bothers me. And so in 20, what's that? Yeah,
I'm just laughing because it reminded me of, I'm going to tell a quick story real quick.
please.
So I semi-retired for like 2 years. And when I say that, it just meant I was going to start working half the hours that I was working before. But in those 2 years, I made the fatal mistake of being bothered by inefficiencies at home. So I
Oh yeah.
gave my wife some knowledge that I had of how she could batch certain tasks in her day. And therefore, she wouldn't have to complain about it by saying that she does this all the time. I'm like, you would only have to do it 2 days a week if you batched it properly, right? Anyways, after that moment, I was told that I should go make things efficient back at work. And shortly after, I was back at work full time.
Yeah,
So,
exactly. Look,
here we go. What's your story?
You're describing one of my isms, which is the system is designed to defend the system. Right. So what you're saying, if I was like step out, because we all think we're unique and like Words is unique or your house is unique or you and your wife are unique and like we're tend to not be. She had a system that worked for her and you came in to change it and the system's like, nope, And so that's a core principle of optimization is that the system does not want to be optimized. And so you got to like work through those things. And so for us, it was a little bit of necessity. I got really serious. I mentioned earlier about getting down to $10,500 in total expenses. If I exclude sales, at the time we're around $5,800 alone. So like total sales expense. So you think about it as like your wholesale expense would be like $5,800. And I set a goal. It's here, $3,000. We wrote it down, printed it on a piece of paper, just taped it to my wall. I was like, we're going to get our entire non-sales expense down to $3,000. When we set that goal, it felt ridiculous. Like, how would we ever do that? How are we going to shave $2,800 alone? And it felt like we got as far as we could go with it on our current operating system with all of our technology. And so I went out and I spent like 6 to 12 months and I interviewed a tech demo, every vendor. And I started to use a metric that I valued. It was like, okay, give me any data that shows where you've increased productivity or decreased your cost per funded loan. I really didn't get it from any vendor. Like nobody could, like everyone was like, we 3x productivity, 40% this. But didn't get it. And so I had hoped that some other technology was going to be the solution, and it was not. So we started dabbling. Started saying like, all right, what if? And so I had never done it before, screwed it up, hired a guy, we built something, didn't get the contracts right. He then took what I built with him and paid him to build, and he's now the head of mortgage technology at a huge bank. And so like, okay, well, let's rebuild it. So we went down, we rebuilt it. That kept moving. We essentially built an orchestration and execution layer. And it's still a work in process. Like our team would be like, this is amazing. I think we're at level 0.5 of where we want to get to it. But really the innovation is not in fulfillment. So on a $400,000 loan, an eighth in rate is worth what, like $1,800 right now, I think, something like that based on the yield curve. And so the total fulfillment cost, meaning processing, underwriting, closing, and post-closing and QC is across the industry like $1,000 to $1,500. So even if you brought the cost of that to zero, you're only talking about an eighth in rate. So like cool, but like not game changing. There is, according to the MBA and Richie May, there's $5,000 of G&A expense per loan across the mortgage industry. So it's the armies of back office people that everybody sort of ignores and they don't think about. It's in accounting and licensing and HMDA reporting and legal and insurance and payroll and all of that stuff is where we got our first real pickup in, and it was like pretty amazing. I kind of ignored all those things until I started to really dig into it. And you can start automating and automating and automating and automating. And you can get it. And once you get a cost difference, you get surplus. And then you start to say, well, what do we want to do with that surplus? And it starts to get fun.
So do tell, like, give us a little bit more. Tell us what it does.
So like, I mean, so like we know like anything, if you just like start to break it down, the technology allows now. So for example, start with some basic examples. One of the first things we did, right? So like really simple. We had an appraisal desk, right? So somebody who ordered appraisals and managed appraisals. So do you guys have an appraisal desk or?
Nope. Don't feel like
we had an appraisal desk and everybody loved it, but it costs like $150 a loan. You're like, all right, what are they actually doing? And what they're doing is that intellectually understanding from experience which appraisal to order and making sure that the appraisal comes back on time. Well, we completely automated appraisal ordering. Then we built an AI tool that makes sure that we got the thing back and that it's correct. Okay, done. We don't have an appraisal desk. Well, back to the systems designed to defend the system, our top salesperson at the time, when he caught wind of it, he was like, what are you doing? He's like, I will quit if you get rid of the appraisal desk. Like, dude, you want the best rates, you want the highest comp, but you're going to quit if I get rid of the appraisal desk. And so it was like a kind of like when you were at home and, you're trying to redesign the household chores. And so I happened to know his LOA fairly well. And I was like, listen, we automated appraisal for the next 90 days. Don't tell the loan originator. I want you to just press the button. Right. And if there's any problems, like, let us know. So for 90 days, we kind of secretly ran the automated appraisal. Then we told the loan originator and he was like, no shit, you've been automating it this whole time and I didn't know. We're like, yeah. So then and then you can automate things like title ordering and receiving title. Everybody's trying to build tools to communicate with the title company. You can just do it all via email where it's reading AI, extracting the documents, doing the 27 quality checks and putting it into the RE folder. Then we automated appraisal payment links going out and doing that piece of it. Then we automated the locks, right? So like now when a loan originator locks a loan, there's nobody in between that originator and actually putting the lock and the hedge on, and the locked LE goes out with that within like 5 minutes of doing it. So you just keep chipping at all these types of things and you look at them as like, hey, these are standardized processes that essentially for 95% they can be automated. Then you start going into condition handling, AI rewriting the conditions. And now what we're doing is, I think that human beings are very bad at figuring out what to prioritize and what to work on and the switching costs. And so there's a study that processors spend 2.5 hours a day figuring out what to do and 2.5 hours communicating what they're doing. Well, there's 5 hours that you can kind of pick up somebody's day if you can figure out how do you organize their work better. So instead of like, hey, processor, get the loan closed. Hey, we're going to start doing a lot of the pulling down FHA case numbers, the disclosures. We built tools to say, I'm not auto underwriting, but I can grab all of your docs. I can verify whether I think it's within a standard deviation. I have a confidence interval of, do I think that this document is likely to fulfill the condition? If yes, dump it into underwriting. If no, have the processor review it. So you just can keep chipping on all these things, and it doesn't cost very much money to do that. A lot of it is just the brain damage of sitting down and saying, what are the human beings actually doing? How can we workflow and standardize that? And then are we going to be brave enough to either subtract, or can we hold the line as we grow revenues? And by subtraction, meaning if you're not, and this was the stage we were in 23, 24, and 25, we weren't really growing. And so it meant downsizing our team, right? And we were very open and public with everybody about that and what we were trying to do. But that's when you get the pickup, because scarcity breeds resourcefulness. And it's only once you build scarcity into the organization that you get to get the resourcefulness where people are like, okay, maybe I will change how often we do laundry. Maybe we should batch process that or whatever it might be.
Yeah. I am not as big of a fan of Matt Ishbia as I used to be at UWM, but I still do admire him for what he's built. And at one time I was a fan, and I learned a lot from him that I try and still implement today. Right. But one of the things that he said one time was that we analyze everything. And whenever we see there's a bottleneck, like, why are we being held up in appraisals? How do we knock hours or days off of? And that's what we did. We slowly, systematically went through the whole process. We analyzed it. We were able to knock a day off of this, 2 hours off of this, 3 days off of this. And just like that, you can fund a loan in 15 days a lot easier than other people, right? So I think just kind of a lesson.
And the difference now is that what UWM is doing, I couldn't afford to do 18, 19, 20, 21.
Right.
You can afford to do it now.
Yeah.
Money's not the constraint anymore, meaning if I wanted to go a project a tech project, right? Custom dev, that would have cost $250,000, cost $25,000 now. Like 18, 250,000 today, 25,000.
Yep.
And so like that's now the constraint is up here and here. Your courage to be able to go do those things and make the hard decisions is not capital.
Yeah, 100%. It's interesting. I'm actually custom building. I'm calling it EOS, but it's Ethos Operating System, and it's everything, right? And it's
Tell me about that.
What's that?
Tell me about that.
Yeah, it's my passion project, and my total baby, and it's really how I envision somebody coming into Ethos and fully like being engulfed into our ecosystem, but not in a way that handicaps them or handcuffs them in any way, right? It's like you said, people are really bad at making decisions, right? Like prioritizing decisions. And this is going to be a way that can actually take over for them. Now, I couldn't have built that in the past. Like I just couldn't have. Impossible. Yeah. Right. But now it's so customized that it's literally my 28 years of experience coming out into technology. And it's amazing. And the beauty of it is that thanks to AI and where technology and the cost of technology is right now, we could just keep building modules on top of it. It's not like the old legacy systems, right? Where you just can't change it because it ruins everything. And that's where Tony Robbins actually said this, a business mastery seminar I went to a long time ago. And this was, I don't know, 12 years ago. He said, you need to step out of your business every couple years and ask yourself the question, if I were to restart this business, how would I do it? And if the answer is you're not going to change anything, chances are you'll be out of business in a short period of time. Well, he followed up at the end by saying, and the way technology is moving faster and faster and faster, you better start doing it more often and you better start making changes, right? And that's kind of where I feel like we are right now. If you don't make these changes and if you don't adapt, you will be dead, right? And now
I think so completely. I think so.
100%.
I think so completely. And the same goes with originators and how they're running their business and how their support team looks and how are they building it and what are the costs that are going into it. I mean, it's just wild what's possible now. So I agree completely with you.
One of the things that we're doing over here is and again, more on the broker side, right? But it's like you're the CEO of your business. You need to start thinking like it and then acting like it as well. And if you don't know the cost of everything that you're doing and you don't know the true effect time-wise and execution-wise and the whole team that's involved, you're not going to make it. Things are changing. It's no longer, and maybe you will. Maybe you'll be fine doing 1 or 2 loans and that'll be fine. But I do believe that 1 or 2 loans, keep in mind, I'm in California, right? So I'm used to larger loan amounts and all that. 1 or 2 loans is a decent amount of money from somebody. I can do 2 loans a month just in my commute time in the car. Like it's easy, right? But I think how much an originator is going to start making on each loan is going to start dropping. And they're going to have to account for that. It's not going to be as lucrative as it was in the past. I think you're going to have to do more volume in order to
we'll see. Look, I mean, we're seeing it. I've got top producers at Princeton that as it's getting easier for them to do the business, they're dropping their comp per loan. We're flowing that back into rate. They're selling less. They're leading with rate. They're doing more loans. They're making more overall money. And then if they're up against the guy that's doing 1 or 2 loans a month, trying to make 125 or 150 basis points, they're getting their clock cleaned. And so I think one of my predictions that I'm building Princeton for is that there's been moats around pricing information for borrowers, right? Like it's hard to know, am I getting a fair rate or not? Is it, or am I getting a good rate? Let me say fair, right? And it's getting easier and easier for a borrower to upload their LE somewhere, get quotes, get bids, get things like that. So I think that borrowers are going to become more and more price sensitive, and making sure that we're positioned in a way that we can play and win in an industry that may get more and more price sensitive. So my advice for originators at Princeton elsewhere is that you want to be able to be in 8 market down to a quarter below the market rate. If you have to sell market rate or above market rate, I think that's a really tough way to run this business.
Yeah, for sure. So
which a lot of people disagree with me on that. Like a lot of people, pricing doesn't matter, rate doesn't matter, service, value, blah, blah, blah. That does not resonate with me as true.
Would you say your guys are all self-sourcing, or are they lead gen as well?
Self-sourcing.
Self-sourcing.
Self-sourcing, both direct to borrower, primarily. I always say fish where the fish are. And so like, I think something like 75% of purchase borrowers get their lender from a referral from their realtor. So like, hey, I want to play in that pond. And if the pond changes, we'll figure out how to change with it. But that's where the pond is.
Well, I'll tell you my pond story then. So I've always said, you get to walk down as an originator, you get to walk down this like pier. And then when you get to the end of the pier, there's signs everywhere. Halibut's this way, mackerel is that way, sardines is this way, sea bass is over here. Yes, there's more fish over here, but it doesn't taste good. And it's just not as good, right? Like, why don't you start learning how to fish where the halibut is, right? Or the sea bass or whatever it is that tastes good. But yet they gravitate to easy, and then it causes problems all around. So teaching them how to fish, I think, is also very important. I'm curious, and then I want to move on. This is just a personal thing that I'm going through right now. What's your feeling on buying leads from, say, LendingTree or something, just lead gen, right? Doing that whole like environment, because it's an environment, it's different.
I think it sucks.
but yet there's companies that make a ton of money on it.
It's a different. I think what I've learned is that this business is so tough. Is I've done consumer direct, I've done wholesale, I've done retail. It's hard to be really good at lots of things. The problem with LendingTree, Bake Rate, all those types of situations is that it's an auction process. And so even if you get good at it, the next guy comes in, is willing to bid a little bit more, your pricing goes up. And so you get to a point of differentiation where the marginal return is very low. And you start to look at the credit cost, the verification cost, the churn. I think it's not a way that I would want to spend my life like in business with. I think it's really tough. And I think it's not fun. And I think if you're outsourcing your biz dev, and I think that's a dangerous thing to do.
Yeah. Well, I'm in agreement. I've only done self-sourcing, referral-based business my entire career. Okay, moving on.
I think originators, what I do encourage, and we invest a lot of time, energy, and money in it, is social media is the freest and loudest microphone that anybody could ever have. And so I think that the opportunity for originator, and by the way, doing social media well is not something that you can just do in your free time. It is an entire skill set. And so I think that the originators that are building huge personal brands that are entertaining, that are valuable, that are building credibility, I think that we're entering the age of distrust. Everyone's like, oh, AI is going to do this and do that. Wait till companies start tweaking their AI models to manipulate and take advantage of borrowers, right? Like, hey, that's the next stage of this. And so if you can build trust on a one-to-many scale, that's a huge asset. And like you talk about, the reason I'm on this podcast is because you liked the things that I was saying and reached out to me. That's the one-to-many conversation. And so I'm a huge proponent of it. but I also think it's misleading when not everybody can be good at it, right? Like there's going to be winners and there's going to be losers in that space. And so if it's something that you think is important, then you have to devote yourself to figuring that game out. It's not something you can just do in your part-time.
You know what? I'll be transparent here and a little vulnerable. I do a lot of it and I got kind of lazy. So I would do the podcast, then we create a whole bunch of shorts and then my team would just kind of post them and they're getting kind of, it's too much of stuff that people don't care about. The long form podcast is good. It's actually crushing it on the Apple, podcast for somebody to listen to the whole show. All the shorts on social media, some of them do okay. Most of them are just like, eh. And then I did an entire test on the last 30 days. And anytime I posted something that was genuinely from me or that was like somewhat personal or downright personal, it 10x, 100x the business type of stuff. So the lesson learned there, and we're revamping everything. We're even going to do a little bit less of it so that we can have better of it. And ultimately I have to devote myself a little bit more to it because it has to be me. Just like I think a team can do things, but the real social media, like successful social media, needs to be you.
10,000%, right? Like, yes, I just need somebody to do my social media. Like if they were that good, they would never work for you. Like, you know what I mean? Like that, like you are the person, an originator myself. If I want to do it well in a way that stands out, I have to devote my subject matter expertise and be willing to share what I think and do that and provide real value. You can't outsource that. I can't outsource my thing. Now, there's people that can help me execute on it. There's people that can make me better and that type of stuff. But it's an entire, by the way, like there's no part of me that's like, wow, I really want to devote a lot of my time to creating social media.
Yeah.
I do it because I want to grow revenue and grow the business and attract like-minded people. And it's a tool to achieve my goals. I think like nobody likes it. I mean, maybe some people do, but I think there's also this like, well, I don't like doing it. I don't like doing it either. But
did you like going to open houses when you wanted to meet realtors?
Yeah, right. Like,
but you did it.
I think that I get it's like a pet peeve of mine when people talk about I've got this goal. Here's what I like to do. I don't like doing this, that. It's like, either you want to achieve your goal or you want to do things that you like and don't like. And by the way, I find that for most of us, if the thing we're doing is working towards our goal, we start to like it and we hate the new thing that makes us feel exposed in the beginning. But then once we're exposed, our confidence builds, we have success. So we start to like that thing. And so this whole, I don't like it. It's just good for you. Stay mediocre. I don't care. Like,
100%. I got to spend a little extra time with my son yesterday, my 14-year-old, and I made him read. I didn't make him. I bought him the book, The Compound Effect, and asked him to read it. And he told me he finished it yesterday. So we started talking about various things and all that, and it led down this conversation. And I told him, I said, learn to do the hard stuff. Like push yourself to do the hard stuff, no matter what it is. You know why? He's looking at me and I'm like, because it'll make everything else seem easy. And that's why you want to do the hard stuff. It may or may not even be like the thing that helps you get to but it doesn't matter. It's what it's going to do to your mind, how like invisible, like just invincible it's going to make you feel, right? Like you're just going to get after it and you're never going to be hesitant to go versus everybody else. I said, everybody else, the majority of everybody else is always going to just be reluctant. They're always going to be pushing back. They're going to be finding excuses and reasons. So don't do that. Get after it. And that's what I think the story for every originator. Get after it. Do it.
Well, you're getting into this sort of sales training conversation. And I'm a student of selling, sales training. I've gone through everything. Ultimately, I see so many people that I'll say is they're taking advantage of loan officers who are struggling and they're like coaching program, this thing, that thing. And it's not a skill set problem for most people. It's a courage problem and a character problem. And it's like, actually you need therapy. Not it's like for the tricks and the hacking and the do this and the do that. It's like, we know what we need to do. We're just not willing to do it. And so what's going on inside of it? And by the way, it might be for the guy that's doing 2 loans a month that wants to go to 4. He's scared of calling realtors as a confidence thing, or maybe he's bad at he's talking and not listening or whatever. Fine. Those are skill set things. But we started talking about the guy that's doing 30 or 40 million, and we got different loan sizes. For us, that might be like 100 loans. To go to 60 to 80 to 100, 100 million in production, it's a character situation of letting go of the limiting beliefs of what got them here. You're holding on to it. You can't get above it. It's not like a coaching program. And so I'm kind of, maybe somebody listens to this like, no, Rich, you're wrong. And I've got the magic coaching formula. I really think it's for all of us. It's courage and character development to get to the next level.
So I'm not a huge fan of the core personal or coaching because it's not my personality, but I will say that I do think there's a lot of value in it because it sometimes just makes people do what's uncomfortable. And if they do it, there's no way you can't be successful. Like if you make 20 phone calls today to realtors and you do the exact same thing in a few days or next week, eventually the compound effect will kick in and boom, you've got a few deals, right? Like do the hard stuff. Anyways, listen, I want to start bringing this to an end. And this is probably going to be, I don't know if it's going to be one of the hardest questions or not for you because you're such a reader, but I want to know what your favorite book or maybe couple books are.
That's a hard question. In terms of what? Because like
first book that comes to mind, doesn't matter the topic, just your favorite book.
Okay, I'll tell you the books that like really like hit me and like, whoa, right?
Yeah.
So like in 2009, found the book. It was a PDF at the time, Principles by Ray Dalio. And that was this like just humbling, like, oh my gosh, like that's what a systems thinker thinks, and like seeing the world in principles. The first time I've really been introduced to that was a wild book for me. And I still go back to it regularly. When I was managing, and so any loan officer that's starting to manage people, the book High Output Management by Andy Grove, who read Intel, that was the book he wrote for mid-level managers. And at the time I was like managing and I thought I was good at it until I read that book. And I was like, oh my gosh, you can sit and spend an entire chapter about like how to give feedback and another chapter about how to run a meeting and how to do this and how to take notes. I was like, I'm just a babe in the woods. On a personal front, this is kind of like a weird book. But and I ignored it for years because the title, but it's called The Way of the Superior Man. Very helpful getting into the polarity and the masculine and the feminine in my relationship with my wife. And that's been a really good book. In the last year, the best business book I've read, and I haven't read a good business book in a very long time, that was like, is a book called The Science of Scaling. And what I took from that one, which really resonated, because we used to be a company that like we were really into culture, and culture was like emotional awareness and having difficult conversations and compassion and kindness and all these things. Then when the market turned, we had to get really into like economics and results, and like we stopped talking about those things. And we would say like, it's interesting that since we stopped kind of talking about the soft side of culture, our culture actually got a lot better, like no drama, and people are happy, and we have got great retention. It was sort of confusing until I read this book and it said, your culture is equal to the level of transparency and accountability built into the system. And I was like, that's what we've done. We've built a culture that we didn't have the words to articulate it, with an extremely high relatively high level of accountability and transparency into the system. And so it gave us a framework for what we intuitively have done over the last 3 years, just kind of like figuring it out. And I was like, oh, we're doing the things that they're describing in The Science of Scaling on how you do it. So I've really enjoyed that. And I've been sharing it with branch managers that are kind of stuck in the like, oh, like I hired these guys and then they quit and my processor's not working out and I'm frustrated and I'm making less money and do it. It's like, cool. Here's a path forward. Now, whether they read it or not, back to our earlier conversation, is up to them. But yeah, The Science of Scaling.
There's two things on that book that I love. And one, I really try hard to live by it, is the Parkinson's law, that you'll fill the time you allow yourself. And I'm a huge believer in it. In fact, when I said I was semi-retired prior, I studied the Parkinson's law. Like it all became about, I'm going to set an appointment for myself like at 12 noon or 1 o'clock and be done. Like that's it.
Yeah.
In fact, I'm going to make it where I have to lose money. Like I'm going to go to a golf lesson or something. And if I don't show up, it's going to cost me. This way I'd have to get there. And the fact of the matter is, it's like going on vacation. You always somehow finish all your work and the week that you're going to be gone for by the time you leave. Whatever it is that you somehow do, you do it, right? So I'm a big believer in that. And then also
and couple that law with idle hands with the devil's playthings, and you get in real trouble. You know, like,
yep.
So what are your favorite books that you recommend?
Also to finish the thought on the science of scaling, it's the floor. Raise the level of your floor, right? All too often people keep talking about the ceiling, but it's like, dude, don't ever drop below this mark, right? That's a huge piece.
Well, I was thinking about the floor when you asked me earlier about like loan originators who aren't doing this or aren't doing that. I was kind of like, we just don't tolerate that, so I don't experience it. That's part of the floor. Like, hey, you got to put a good loan package together. Just that's your job. Do your job.
It's just what it is. Yeah. For me, I love the science of scaling. I love the compound effect, and I love Good to Great. Good to Great's probably one of my most favorite books. So those are the three there. All right. So last question. I'm going to need you to step out of that CEO role and get down and dirty, roll your sleeves up. I'm going to pick you up. I'm going to drop you off somewhere in the United States where you don't know anybody. And I'm going to tell you, you need to originate, right? And you have to make $1 million. Now, you don't know anybody. You have all the knowledge you have. I give you an allowance, so it's just enough money, but you can't like just go do 1 million things, right? You have to go kind of grassroots. And oh, by the way, you got 4 kids. Well, guess what? You can't talk to them or see them until you make $1 million. How are you going to do it?
So I think since you've got time constraint, you don't know anybody, cold calling's got to be a part of it, right? So you're just like the discipline, and I don't know what the right number for that would be, but like call to introduce yourself, not ask for business, but introduce yourself. Like, hey, this is who I am, blah, blah, blah. I hope to get to know you. The second thing is that I'm figuring out what I like to do that I can build community around. If I'm not a golfer, but I was a golfer, there's a new guy who started with this, no experience, and he was frustrated. And it's like, what do you like to do? He's like, I like golfing. Cool. I want you to golf every day, but you have to bring a realtor with you every time you golf, and then tell that realtor to invite new. So building community, doing things that you like to do. And then I'm doing social media to attract, and I'm pumping out massive amounts of high value content. And so just that, like, everybody in that town is like, who the hell is this guy? He's everywhere. And so I'm just going to win with a massive amount of activity on that front of it.
And question for you on the social media.
It was a period in life where, what's that?
Right. Question for you on the social media. Do you do massive amount of content towards like a client or just for realtors, or both?
Both. I think that you understand the picture. So you have to have a core customer, right? And so it's the realtor and the borrower. What's important to the realtor? What's important to the borrower? Understanding what they're going through and provide insights, answers, or solutions to that, not in a salesy way, but like actually providing value, more value than the other people do in the stories that you're telling and what you're putting out there with it. There was a period in my life I ran a real estate brokerage, and I used to do a lot of sales training for realtors. I get so frustrated. You know, like, you've sold 2 houses in the last 12 months. Do you do this full time? Like, you know, like, I need a better CRM. I need better marketing. You're like, no, you need to do shit. And I actually, I was running like a new agent training, and I like couldn't take, you can see I start to lose my mind when people blame everything but themselves. Like, it's my like, hey, like Charlie Munger's got that line that's like, the worst curse you could wish on your enemy is a victim mindset. And I was like, I bet I could go to the supermarket and drum up a listing right now. People are like, no, you couldn't. So it was like the lunch break. I left the training room, went over to the local supermarket, wore my real estate hat, walked around, said hi to everybody, and I picked up a buyer and a listing.
Yes, I love it.
You know, and it was like guys, like, you just, and so, but like, hey, it's easy for somebody like me or somebody like you that, and I don't mean to be diminishing of people, and I don't mean to sound arrogant, but like, been through the reps to have confidence in myself, to know that I could go out and do that, how to navigate those conversations. And so it holds so many people back because their insecurity and self-doubt. There was a period in my life when I had that too. And so then you got to fake it till you make it at that point, and do the motivational videos and listen to Tony Robbins and get yourself hyped up, and put yourself in situations where you're willing to get exposed. Because when you do the thing that scares you, you become more confident. If you pull back from the thing that scares you, you become more cowardly. And so the answer is like, I would go do the things that scared me and just kind of like shut off my amygdala and just be like, I can't afford not to do this. One of the things I worry about now, it was really easy for the last couple of years to be very courageous because you had to. Now that the things are getting better, I'm like, am I gonna have the courage to keep innovating in the way that I have these last few years when things are going well? I worry about it. Courage to do the hard thing driven by necessity. And if it's not as necessary, what will happen?
At this business mastery seminar that I went to, it was, I think, the Lyft. It was the CEO of Lyft was there, and there was an interview with him, right? And he talked about sitting in the garage, right, developing the whole thing and creating and all that. And then as a CEO, right, I keep trying to remember this too. It's like, once you develop it and it's working, hand it off. And then your job, he said, my job is now 5 years from now, what is Lyft going to be doing? And at the time, it was all about self-driving cars. And so he was done with the day-to-day of that. And he was moving on to the next big vision and creating that opportunity so that the company wouldn't just die in 5 years. Pretty cool.
I think one of the best jobs, I had a mentor who was a turnaround guy, where private equity shops would buy a company, they'd bring them in for 18 months, he'd tune it up and he'd get out of there. I've only ever had to tear down and rebuild my own stuff. Like, how fun would it be to go into somebody else's company for an 18-month rip and rebuild it and get out of there? I'm always killing my own baby and rebuilding it. It's like, oh. So yeah, that's my dream job, actually. I think being a turnaround guy for struggling companies with an 18-month stint, like come in, like just go all after it and then be able to get, because that's what happens. Like you said, when you build your thing, you delegate and move on, but it's your thing that you built that you love. And you have to pay attention to that. If it stops working, are you willing to tear down the thing that you built? And that's tough. It's emotionally difficult.
Got to take the emotions out of it at that point. Yeah.
Well, Dino, thank you.
Rich, I really appreciate you coming on, man. I enjoyed the conversation. I actually really enjoy, I can see your brain in a way, and you're quite brilliant. I actually really enjoy watching you work and how you think through problems and goal sets and all that stuff. So kudos to you. I appreciate that. Keep reading.
I respect you. I respect you a ton as well and enjoy the conversation. And I appreciate that you've got, like, there's no right way or I'm a big believer there's no right way or wrong way, but you have to have a way. And you're clearly a guy that's been very thoughtful and have a way that you do things.
Well, I appreciate that. Thank you. And guys listening, thank you. You guys are amazing. I started this just as a way to get to know a few people and, quite honestly, recruit. And it turned into so much more. So we've made it into the top 100 of the Apple podcast. We went from doing 25,000 downloads in the first year to now I think we're at like 60,000 downloads a month, as opposed to like the whole first year was only 25 and growing every single month. So really, I want to thank you. I want to just come out and say, keep listening, keep giving us your feedback. We got season 2 coming, just so you know. It's going to be a similar but quite different. What we're going to do with season 2 is basically after every single show, which we're going to fine tune it throughout the process, but every single show is going to produce a playbook. So you'll be able to go download a playbook on whatever the topic is. It'll give you actual action items and steps so you can go out and be successful with it. So thank you guys so much for listening. We'll see you on the next one.